Accounts and budgets is where you go to maintain your budget and forecast data. From the account selector, we can choose to review any area of the profit and loss and balance sheet. To edit or change the data, we simply choose the area that we wish to review, choose the account line, select budget per period, click on the data we want to change and enter the new value. We can then copy it down or right click to copy to all periods. To add a new account, simply click New from the top toolbar, add the description, add the account code, choose how you wish to calculate the budget. In this case I am linking it to a non-financial driver called software. Note that we could also use equations and multiply a number of activity drivers together. We then click the budget per period, choose the appropriate profit center, enter the price for this product, the same for the second location. Once the budget has been entered, the next step is to review the key assumptions in the model called cash flow profiles. Here we see the default sales profile for revenue items. We have a choice of editing the profile and changing it, or right clicking to add a new one. Let's right click and view this profile. Click Show More, and here we can see that our debtors are being accrued to accounts receivable and collected to the default bank overdraft account. 90% of those cash flows are being collected in the same period, and 10% are assumed to be collected the period following. To amend the main profile, click a new line, add another percentage, choose the period, and then balance it so that it adds to 100%. Note that we can choose which balance sheet account we want the accrual to go to by unticking the default selection, and by right clicking and picking a different balance sheet account, or by unticking and then right clicking and choosing a different bank account. This enables us to customize the profit and loss, balance sheet and cash flows to exactly match your ledger transactions. Other key capability includes the ability to add any number of cost of goods sold accounts linked to sales and inventory, any number of direct expenses. We can also add any number of overhead type expenses. Here's a list that would be typical of many organisations, including operational expenses, administration, financing and non-cash type expenses. The miscellaneous area can include any number of key activity drivers, also called KPIs. In this model we have staff full-time equivalents and the predicted sales volumes for each of these products by the location managers. Other key performance indicators could include chargeable hours, number of customers, tonnes, kilometres driven, or any key indicator that is important to your business. Other balance sheet capability includes the ability to create multiple bank accounts. Every time you create a bank account, the system automatically creates a twin overdraft account so that it can calculate the net asset or liability. Multiple debtor and payable accounts so that we can more accurately predict the cash flow implication of opening receivables and payables. Inventory. In this model we have 3 inventory accounts: work in progress, finished goods and software. The software allows 4 methodologies for calculating inventory. There is the automated purchases calculated method, which looks at the future period's cost of sales. With inventory levels specified, we can tell the software what the answer is to be at the end of each period, and purchases become the balancing item. Purchases target specified. This is where we have seasonal reasons why we may purchase different amounts at different points in time. Using this method, the inventory rises and then falls according to when purchases are made. And the fourth method is where we can calculate the inventory value by recovering overhead expenses and purchasing raw materials in the form of a BOM or a recipe. Other current assets include a number of default accounts, including amortizing prepayments, the automated GST, automated interest receivable and payable, Current liabilities includes GST, tax provisions, holiday pay. Then here we've added a number of shareholder current accounts, typical of a chartered accounting firm or a small business. Loans, these enable us to calculate any type of principal and interest, table mortgage, interest only, simple interest, interest-free loan. Fixed assets, this enables us to create any number of asset accounts and appreciate those assets either using straight line or diminishing value. Intangible assets include amortization of goodwill and other setup type costs. Investments might include a lawyer's trust accounts with receipts and payments and net interest being generated on those. Typically it includes investment in other companies. And equity is for dividends, opening retained income, shareholders' funds. On the left hand side of the profit and loss, there are 3 dedicated buttons for posting journals. These enable us to move funds from one balance sheet account to another. To see the results, close the account selector and click on Results View.